Welcome everyone to this video on pair trading stocks, co-integration, and PairTrade Finder Pro. My name is Geoff Hossie, and I'm the Managing Director of Event Driven Investor, the publisher of PairTrade Finder Pro software. So we make an assumption because you've at some point joined our email list, which means you are interested in joining one of our webinars to learn about pairs trading, that you are a trader. And as a trader, you may ask yourself the question, why do you want to pair trade stocks? The first is regarding co-integration as a pair trading strategy. And what we see is that the Haken-Afewubu study in 2015 says that returns are especially high with monthly excess returns, including transaction costs, greater than 1.3.8% based on some of the settings, and going up to about 5% based on other settings, over a period of more than 10 years. So that's unlevered. If you were to lever that, you could more than double that return, providing that you were able to hit the returns that were in the study. There's another study that was done by the Chenze and Fang Li back in 2012, and they tested an equities pair trading strategy that uses historical return correlations to determine pairs. And they find that a trading strategy that bets on convergence from correlated pairs when they diverge has alphas of up to 36% annually for an equally weighted, again unlevered, portfolio. And again, if you apply 2 times that or 2.5 times that, you're up to almost 100% per year. So I hope we have your attention. That is why you want to pair trade stocks. The other reason you want to pair trade is that the main benefit of stock pair trading is that your exposure to market and sector risk is significantly reduced, i.e. it's hedged. And why is that? Because when you pair trade, you're holding both long and short positions in equal dollar amounts in highly correlated and co-integrated pairs of stocks, usually in the same industry and overall sector. This is one of the great benefits of this trading strategy and why it's been so successful over more than 50 years. And that is because you are reducing market and sector risk. So, sideways market, upwards market, downwards market, it doesn't matter. You can make money in all market types. And if the market crashes, you are significantly protected or hedged against that market crash. What do we mean? Okay, so instead of drilling down into 2 individual stocks, sometimes it's easier to explain this on just the overall market. So let's take a look at 2 ETFs here. And I did this quick graph in PairTrade Finder Pro this morning. So we're looking at 2 ETFs, DIA and SPY. So this is the Dow Jones Industrial Average main ETF and the S&P 500 main ETF. And you can see here that this is a relative performance graph from 1 year ago until today. And what do we see? Well, we see highly correlated ETFs. They've delivered very similar returns over the period. Now, the big question and reason why pair trading works is because the price ratio relationship between 2 co-integrated stocks is much more predictable and reliable than the outright prediction of the direction of the price of a particular stock. Okay? So what is difficult is to know, let's take the green line, which is DIA. It's very difficult to know whether that's going to go up or down over the next 6 months, year, whatever. Very few people can successfully predict stock market direction over a meaningful period of time. But what you can predict, and this is why pair trading works, is that if these 2 stocks are co-integrated and correlated, when they diverge in performance, for example here, when SPY was outperforming DIA significantly, at some point they will reconverge their relative performance. So what you can do is you can sell short SPY here, and you can buy long DIA here, and when they reconverge, you'll make a profit. So that's what we mean by pair trading, and that's why it works. So let's take a quick look in more detail at our software and that pair of ETFs. Okay. So what do we mean by diverge? Well, in this chart here, you have the moving average of the core ratio of the pair, and with the green line, you have the actual daily core ratio, which is DIA over DIA plus SPY. Okay, that just means it's bounded and it's been smoothed. And what do we get? We see that it's going a long way away from its moving average, then coming back. Going a long way from the moving average, coming back. Same thing here. Well, in PairTrade Finder Pro, you have what's called a plus-minus chart, and it's showing you how many standard deviations, okay, and this one's done, I think, on a 60-day look back, how many standard deviations it's gone away from its moving average. And when that reaches a certain number of standard deviations, in this case, we've set it at 2.7 standard deviations, PairTrade Finder Pro will call a trade signal to enter. And by enter, it means, for example, this trade signal was go short DIA and go long SPY. And this trade signal happened 6 days ago. Okay, that's this one here. But we track this, and PairTrade Finder Pro tracks this in your watch list, 24/7 market radar. And when it gets too far away from this average, it'll call a pair trade. And then when that reconverges down to 1 standard deviation, if it's been at plus 2.7, or minus 1 standard deviation if it's at minus 2.7, then it will call an exit. Okay? And what we can see here is that there was an entry here, exited here at a profit. Entry here, exited here at a profit. And this is the most recent trade, entry here, and it's still going, this trade. And this is over the last 365 days. Here's the back test of just these two ETFs. Now, we would never trade these because they don't have enough volatility, and commissions eat up a lot of the returns because they are so correlated. We're over at 91% correlation, right? So in a back test over 3 years, there were 6 trades. And here you see the results of these 6 trades in an equity curve. And then the green is after commissions, okay? And they were 91% correlated. They were not co-integrated over the last year and a half. Their compound annual growth rate was about 1.5% for the money you left there. And the max drawdown was slightly larger. You got, as we said, 6 trades. The total profit was $714.82. You paid a whopping $280 in commissions. Your net profit was $434, and the average net profit a trade was $72. Okay, 100% of those trades over those 3 years, those 6 trades were winners. And the average days you were in those trades were 14. And here you have the latest. As I say, this entered a trade 5 days ago. It went short DIA, long SPY, when it was 2.75 standard deviations below the line. And as you can see, that trade is sitting at the close of the market yesterday at 119.64 profit. And that's because this core ratio is reverting back to the mean. Okay, so that's what we mean by pair trading, and that's how we look at it with PairTrade Finder Pro. Who we are. We are PairTrade Finder, and we've created our software. It's the world's leading online long-short backtesting and trading software platform for global equities, ETFs, CFDs, futures, and FX. You can trade all of these through PairTrade Finder Pro. We created this software over 12 years ago, 2008. And it's been used by tens of thousands of successful pair traders, both institutional and retail. And it's designed to allow any investor or trader to learn to make winning long-short trades consistently with controlled and measured risk. And it offers a suite of professional advantages to help you level the playing field with institutional traders. And it's simple and easy to learn and can protect you in the event of a market meltdown. And that's because of the hedged nature of the pair trading strategy, the long-short strategy. So what can we do for you today? Well, first and foremost, we make pair trading stocks easy. And besides our video training course, taught by professional pair traders, our tutorial videos, which take you through every aspect of our software, our Trade of the Month blogs, and our ebook with trading secrets from professional pair traders, we do the hard work for you to learn to become a consistently profitable pair trader. And how do we do that? How do we give you that extra turbo boost to get you out of the gate and pair trading consistently profitably right from the start? Well, we curate and allow our new subscribers to autoload into PairTrade Finder Pro 50 of our top US stock pairs. Now, these pairs will generate immediate trading signals for your review. We call these the Fast 50. PTF Pro will then semi-auto trade these signals directly into Interactive Broker's Trader Workstation, or if you use a different broker, you can receive these signals by email and trade them in any brokerage account you use. So what's it all about? Again, let's just quickly recap that. So it's a curated set of 50 USA stock pairs. We've generated these after hundreds of hours of backtesting, profitability filtering, and fundamental screening of over 2,200 companies. We do the hard work for you. Okay, again, they get auto-loaded into PairTrade Finder Pro when you subscribe to our software. And most importantly, we've just launched a new February 2022 vintage, and that's launching today, and we're offering a super sale of that of minus 40% off. So let's take a minute and just look at how the February 22 vintage did in backtesting over the last 12 months. Okay, so this is an in-sample backtesting, and it's all based on end-of-day trade exits. All the data is end-of-day. Adjusted close, Yahoo Finance, end-of-day data. Okay, there were 128 exits. There was a total profit of $36,842, and that's after commissions and slippage, and that's based on trading each of the pairs at $5,000 a leg. Now, if you can get CFD leverage of 5-to-1, it means for every pair you trade, you need to put $2,000 at risk. Okay, that's your margin. Of those 128 trades, 124 were winners, 4 were losers. That's a 97% win rate. The biggest winner was over $1,000. The biggest loser was just over $100. Your average winner was $300. Your average loser was about $80. That's a reward risk of 3.7 times. Each trade, well, the average trade lasted about 15 days, and that could go anywhere from 2 days to 51 days. If we look at this bottom bit here, we're going to just do a very quick imputed return analysis so you can understand better what the Fast 50 can do for you. Well, of those total trades, and 128 with 15 average days in trade, it means there were about 11 trades per month. If we add 25% headroom to that, let's say you need capacity for 14 trades a month. That is a nominal capacity at 5,000 a leg of 140,000. Okay, that would need to be in place in the market. If you get 5-to-1 CFD at margin at Interactive Brokers, you need to put up 28,000 margin. Let's add another 25% headroom on that, just in case there's an extra trade or two, or some of them go offside. Let's assume you need $35,000 worth of margin, okay, to hold those trades. The total profit, net of commission and slippage, was $36,842. We take the estimated margin interest paid, which is about $869 over the year, giving a total net profit of about $36,000. So the average return on imputed account margin was 102.8%. That equates to 6.6% per month. Okay, so that's what the backtest looks like on this current February 2022 vintage of the Fast 50 US equities pairs. Let's give you a quick example of one of these. Now, the example I showed you of DIA SPY was just because we wanted to show you the overall market ETFs and how the concept of pair trading works. However, when you drill this down into single stocks in the same industry and same sector and same industry subsector, you can really turbocharge and get extraordinary results. Okay, so here's one of the Fast 50 that we wanted to highlight for you, and that's Franklin Resources Inc. versus Prospect Capital Corporation. And let's look at the backtest to show you what these Fast 50 are all about. So the symbol is BEN for Franklin Resources and PSEC for Prospect Capital Corporation. We did a 2-year backtest for these Fast 50. There were 8 trades. There was 58.8% correlation between these two securities. They were co-integrated, so 0.94 is a p-value of 0.06, so it's co-integrated using augmented Dickey-Fuller co-integration. Don't worry about that if you don't know what any of that means. You just want to see this over 0.90, okay? If you just put your money to trade this pair alone over the last 2 years and were earning nothing every time it wasn't in a trade, it returned 40% a year on your money with a max drawdown of only 3.3%. Profit factor was infinite because there were 100% winning trades. The average net profit per trade was $600, and the average days in trade was 5.5. Here's the backtest equity curve, and you can see those 8 trades. Very, very little drawdown anywhere, which is why this is so low. Here is the ratio over the last 2 years. You can see it's very flat, lots of zero crossings, which is what we want to see in reversion to mean pairs trading. And down here you see the plus minus chart for the last year. So we're looking at this section. And you can see entry here, exit here, winner. Entry here, exit here, winner. Entry here, exit here, winner. Okay? And you can see those reflected here. This is, again, this portion of the chart has been amplified. Every time it got too far from its moving average of the core ratio, we entered, and then it reverted to mean and we exited. That's what we would have done. This is a backtest, okay? Let's be clear. So that's an example of one of the Fast 50, and you'll have 49 others that have similar characteristics to this. Okay, so what about live trading results? So in-sample backtests are great, and they look wonderful, but they have limitations. Out-of-sample live signals results in most quantitative trading systems generally tend to deliver only about 50% of the back-tested results, and that comes from Perry J. Kaufman, Trading Systems and Methods. It's sort of a rule of thumb. Now, when we pair trade ourselves, we filter the raw Fast 50 signals to avoid taking trades where the divergence is due to fundamental value shifting events. You really want to avoid that, like a huge earnings surprise, or a CEO retires unexpectedly, or there's a fraud or a scandal. You know, those things will lead to the pair to diverge, and it may never reconverge. Okay, so we screen for those. However, nevertheless, the performance of the raw live signals from our top 30 and Fast 50 pairs, we used to do top 30, now we do Fast 50, has been impressive when measured. We don't always measure these, but sometimes we do. And when we look at them, here are the live out-of-sample results of raw signals on some of the previous top pair sets we've produced. Okay, and for each of these, you have our blog posting. You can just copy this URL and go straight there, and you can see the blog post in detail. For example, this one, live signal results, our Fast 50 March Vintage, U.S. stocks pairs performance in first 8 weeks of trading plus 17.3%. Okay, and in these blogs, we go in detail. So, you know, here is that analysis we've done. You've got every one of the closed trades, and then you've got the open P&L, and then the summary, and how that equated to the numbers we're talking about. So in this case, it was 17.3% over 8 weeks. It was an imputed 8% return per month and an imputed annualized return of 140%. Okay, that was when we measured this one here. So, you know, we got some spectacular performance when we measured these, and, you know, we can't ever make a guarantee about any kind of returns. What we can do is point to live out-of-sample signals that were generated by our Fast 50 pairs or top 30 pairs and show you what would have occurred had you traded those as and when they were called. Okay, and that's what these stand for. So please feel free to jump onto our blog and check that out. What do our customers say about PTF Pro and our Fast 50 curated pairs? Well, we pulled a few quotes here. I'm just going to take you through a few of them. Chris Stone, I am amazed that more people are not using your software. I have managed to make $8,000 in the last 3 weeks. I credit that to you, your staff, the great videos, and the excellent software. Let me say I love your product, and I intend on being a lifelong user. I am truly grateful. This is one of my favorite feedbacks that we've had since I've been managing this company. He says, just to say how delighted I am with your product. For the first time in 10 years, I am consistently profitable. In 10 years. So we've been able to make him consistently profitable despite over a decade of being a not consistently profitable trader. If I can sort out my discipline and stick with the signals, the results would be even better. Yours eternally grateful. You know, it's very, very gratifying to hear this from our members. And so another one from Jacques Ovray, I started trading the strategy in September on a Collective 2 account, and I also started trading the strategy on my own account at IB in October. I'm just glad that the strategy performs as expected. Backtest equals real time. Okay, so some great feedback from our members, and we wanted to share that with you. Finally, if you're having a hard time getting your head around how you can make these kind of returns pair trading and why isn't everyone doing it, remember, why does it work? Pair trading works because the price ratio relationship between two co-integrated stocks is much more predictable and reliable than trying to pick the direction of either stock. Okay, so what we suggest you do is watch for our next video in this series. We've opened, along with the February Vintage Fast 50 launch, we've opened a February super sale for the next 6 days. So we're going to have a few videos, and in the next video, we're going to tell you all about co-integration and show you the latest research findings in detail and show how it can work for you. So happy trading, everyone.